Hello everyone and welcome to the video blog we have with the Rafael del Pino Foundation. It's been a while since we talked the last time, and it's been because of the lockdowns and the COVID-19 restrictions. And it's worth to talk about the COVID-19 crisis and the economy after the COVID-19 crisis. We're hearing all the time from multinational entities and from the International Monetary Fund, etc., that now is the time for governments to spend and to spend without control, and that should provide support for the recovery of the economy, and we should not think about fiscal consolidation at this point. Well, this is obviously something that looks optically attractive from the idea that somebody has to incentivize the economy. But this is a pandemic crisis. A pandemic crisis is not the same as any other crisis. In a normal crisis, when you inject liquidity and you increase spending, you may create a certain multiplier effect in the economy where investors, where companies invest more or take more credit. It's hugely doubtful anyway in a typical crisis, but it's even more doubtful now because most of the liquidity injections and the massive stimulus are directed towards the wrong side of the economy. On one side, the governments are using the fiscal space to perpetuate structural imbalances, large deficit spending, mostly on current spending that does not generate any economic real return. Second, vast majorities of the liquidity injections go to sovereign debt and to companies that had access to credit and to capital anyway in markets before the COVID-19 crisis and could access it now with good restructuring plans. So a lot of the money that is being used is used to perpetuate already high imbalances and high levels of structural deficits, and to zombify sectors that will not undertake the necessary restructurings that they needed already before the COVID-19 crisis. We're talking about the airlines, we're talking about the auto sector, we're talking about so many of those sectors that are being zombified with high liquidity injections. Who's suffering? The companies, the businesses that are suffering in the current environment in the middle of a massive liquidity and fiscal stimulus is the social and business fabric that is comprised fundamentally of very, very small companies. The micro companies that generate most of the employment and most of the growth in growth periods are the ones that are suffering the most. Those are the ones that are closing down. And they're not closing down because they had a bad strategy. They're not closing down because they took too much risk. They're closing down because of the misguided measures that governments are taking that are hurting sales while costs and taxes remain high. Therefore, what we see is that about 55% of companies are at risk of closing down in an environment in which liquidity injections and fiscal stimuli are enormous. What has to be done? We need to do the opposite of what was done in the previous crisis. In the previous crisis, what we have always seen is that governments spend more, they increase deficits, then they support the large companies, and at the same time then they increase taxes to try to reduce deficits. What they need to do now is to use the fiscal space to support growth and jobs, and the only way in which you support growth and jobs is not by directing liquidity and directing help to the large companies. Okay, to do part of it to them, that's not a problem, but what you need to do is to direct the support to the micro companies. You have to exonerate taxes to micro companies, to small businesses. You have to at the same time provide liquidity without provide liquidity lines without recourse to small companies so that they don't suffer death from working capital. And at the same time, what we need to do is to understand that if those measures are not taken urgently, the recovery post-COVID-19 will be slower, more indebted, less productive, and with worse employment. So we need to redirect those support mechanisms to the smallest part of the company fabric, to those businesses that have the largest capacity to improve employment, newly created businesses, small businesses, and also to reduce massively the tax burden, to use the fiscal capacity to support jobs and growth. Any other measure will lead us to stagnation and higher debt. Thank you so much.